Hello everybody, hope that you're good. I think I like this new style of videos that is basically 1 or 2 videos a week in which I go from the weekly time frame or daily time frame and I go into lower time frame to the 4 hours time frame to the 1 hours time frames. I start to find different setups and triggers and I explain to you in advance so then you can keep an eye on the price action and maybe the video helps you to identify something new, which I hope that the last video did, because we were talking about the idea that this drop here was a deviation, same as here, okay? And it's something that caused me quite a lot of critics, not here in YouTube because I have my small community and I'm more respectable. On X, I would say the same, but on X I reach to other random people and different people that don't follow me and don't know who I am, and obviously I understand them because when you see everybody being bearish and I don't know, the whole sentiment across the market was negative and thinking that okay, yes, we're in a range, this was a deviation but this looks different, so that means continuation to the downside, and everybody was talking about buying at 50k or even lower than 50k. I've seen. I don't blame them, to be honest. I don't blame them, but this is a lesson, not from me, but from the market, that you have to be prepared for anything to happen, and you don't have to marry to one theory, because the market doesn't behave like that, okay? Each trading moment in the market is unique. It doesn't get repeated. And this is a very famous quote in the trading world, and I really agree with it, because that's why people are often wrong. And I mean people as the general retail trader thought. Imagine hundreds of thousands of traders, okay, and plus 90% of them think that the same thing is going to happen. Usually that 90% are going to be wrong because the market is going to trade against them. And that 90% of the market is believing that scenario because is that what has happened the last time, okay? And also because, well, they were releasing news about the German market selling, about, I don't know, call it what you want. The market was in a very delicate point of breaking below a range with negative news. But then we had the CPI data, and I was talking to you about it in the last video too, okay? You got employment data coming higher, CPI, if it came lower than expected, which it did, then that was going to trigger, that was going to be the catalyst of this deviation. Okay, and that's what happened. So don't marry to one theory. I don't know if I helped with a video to any of you to at least don't lose money in that moment. And if so, I'm very happy for that. That's what I make these videos for yourself, not for myself, because I don't gain anything with these videos. I just enjoy making them. But anyway, let's go into the chart, okay? So we're in the daily time frame. We mark the range as it should. Range highs, and these are the range lows, and we got a deviation here, which actually was a very clean deviation, because if you notice, we had a very long wick right here. I always say that wicks are imbalances and therefore they have to get filled. I would say that plus 95% of them get filled, and when they get filled, we consider them to be filled once they've been filled at least the 50% level, okay? So you can mark the 50% level of a wick, and that would be the target to consider the wick to be filled. I don't know if that was clear. So yes, you have this wick here. So the 50% level was around here, and you can see that it got filled with this other candle, right? So any imbalance that we left behind was this wick, and it got filled. So this is very clean, okay? Therefore, there is no reason to continue going lower, as long as you don't come to the range lows, testing a resistance, and maybe then, yes, you could see another leg down, but in principle, we were considering this to be a potential deviation, okay? And I was expecting more resistance at the range lows, although we got them. Let's go to the 1 hour time frame. We got that resistance there, because if you notice here in the 1 hour time frame, we were for how many hours? Around 15 hours. Yes, 15 hours of getting rejections from this level, okay, from the range low. So you can see how he acted at resistance for almost a whole day, but then price broke that level, retested, continue. Now the question is that enough of a retest? I'm not sure, because this is the 1 hour time frame. But if you go into the, I don't know, into the daily time frame, for example, you're gonna see that there hasn't been really any retest in that area. Okay, so I would say that the key important things to notice now is that we are back inside the range, and I've heard a couple of ideas why this might not play out, and I'm going to debunk them right now because they are not very strong arguments. The first thing that I've heard of is that this is a potential deviation. It doesn't make any sense, because that's not how deviation works. Okay, you have a range, you have a deviation, you're still in the range, you have another deviation, you're still inside the range. You cannot have a double deviation like this. It doesn't make any sense. So no, I mean, in fact, that you are back into the range, it confirms that this was a deviation, and now again you're back into the range, because that was a deviation of the range. So that's not a strong argument to say that prices are going to continue going lower. And then we have another argument, which is the CME gap. Okay, so I think I have the CME gap here. You can see how we created a gap from here, from 57,800 to 61,000. That's a CME gap, because it's a pump that happened during the weekend. But you can see that this candle here is Friday, and there is a gap until Monday. Okay, so Saturday and Sunday, any move outside where we beyond Friday close, it creates a CME gap. Okay, a gap in the Chicago Mercantile Exchange. So you can see how other gaps have been reacting, and you can see, for example, this one here is of a similar size, from 39,000 to 40,000. And what happened here, guys? If you notice, price didn't go back to that CME gap for a month and a half. Okay, because this gap was created during the 2nd and 3rd of December, and we actually filled this gap the 22nd of January. It took a month and a half to get back there. Okay, so no, it doesn't mean anything that we have this CME gap. It means that it's likely the price goes back to this area, but it can be a week, or usually it's a week when we have a small CME gaps, like for example, I don't know, you have that one there that gets filled straight away. Also, for example, this one here that is tiny. But for example, pay attention to this. This one here, it doesn't end up being completely filled. So this one, for example, could take even a year. But anyway, what I wanted to say is that when you have a big gap like this, it usually takes longer to get filled. Okay, it can take a month, it can take 2 months, it can take a year. During this drop, go to the daily time frame. What in the daily time frame? Okay, during this big drop here, we created some gaps here. Okay, and if you notice, we filled them. How many months later is this? Okay, so look, this one is in June and this one is in May, and we filled the one in June in April, and we filled the one of May in October. So a year and a few months later. Just so you know, it doesn't need to get filled straight away. In fact, look at this one. You have here a CME gap from March that hasn't been filled, and maybe it takes 5 years to get filled. So a CME gap, it means that yes, there is an imbalance there in the chart, but it doesn't mean that it's gonna get filled immediately. It can take a very long time. So no, guys, it doesn't mean anything. Okay, it doesn't mean that because we have a CME gap, now price is gonna go and fill it straight away. It doesn't work that way. Okay, so yeah, those are the two arguments that I wanted to talk about, because I think many people are talking about the CME gap, and careful with that. Okay, it's what I always tell you: don't marry to one idea. It can take months or years before we get again to that price level. Okay. What else I want to say? Okay, daily time frame. If you notice right now, we're above the daily 50 MA, and we just tested a support. Now let's see how this candle closes today. But I would consider that this is a closing with a wick. So price probably would have to go low and fill this wick. But if you notice this projection that I have here, What we were anticipating was a push above the range lows. That's what we're seeing now. It actually went a bit further. And a retrace, okay? So perhaps it happens, perhaps it doesn't happen, because it's the same. Now, many people are waiting for this retrace, and perhaps it doesn't happen for that reason, because when many traders are waiting for that retrace, sometimes the market doesn't want to give it, because it doesn't want the retail trader to be in profit, in a good position. So perhaps it doesn't happen, but my point is that if it actually happens, if you actually come again to the range lows, then I would expect this area to be a strong support again, as it's been previously, for example, here, or this time here, or here, okay? So we could see a push up from there. So that would be the area where I would open more longs, if you get there, okay? And why would I open longs here? Well, because simply I would just be playing the range. We have a deviation here, price goes to the range highs. We have a deviation here, price is going to go to the range highs. That's the next natural target after a deviation, okay? Is the other end, or the other extreme, or the other side of the range. Also, if you notice here, look at this yellow line. This dotted yellow line is basically marking a strong resistance that is not the range highs, because the range highs are actually, as it says, the heights of the range, therefore is that one. But this yellow dotted line is marking a strong resistance, and if you notice, we've left here, between the yellow dotted line and the white line, a lot of liquidity, because all this area hasn't been hit, hasn't been touched. Those highs are still there, okay? And usually when you see that, there is a lot of liquidity here. So to me, the two targets to the upside are two. It would be this highs up here, okay, between the yellow line and the white line, those highs. And also you have a lot of liquidations right here between 67,500 and 69,000. So all this area here, that is full of liquidations too, right? That means that if we get a retrace, then I want to open longs to get here a take profits, and here the other take profits. All right, I hope that was clear. Now, if we go into lower time frame, and this is something I like to do, go to the 4 hours time frame. Let's try to break this up a bit more. You can see how we have a very strong relationship with the 4-hour 50 MA. Look at this, guys. Since we've been going down, resistance, 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 resistance. Let's continue more. Deviation, and then resistance here, okay? Here also resistance, and we haven't tested a support yet, guys. So if you notice now, the 50 MA is in this level. It's going to continue going up, and that could mean that perhaps we see that retrace, and that is when I would see the range lows holding, also the 4-hour 50 MA holding, tested at support, and continuation to the upside. Okay, so right now to me the most interesting chart at the moment is the 4-hour 50 MA, because I'm waiting to see what happens. What I would imagine, again I say imagine because I don't know what's going to happen, I don't have a crystal ball, is the price starts to consolidate here. For that, the 4-hour 50 MA is going to continue crawling, going up slowly, and this is when we could see a sharp retrace, maybe a week or maybe a strong candle body, touch around 61,000, 60,000. 60,000 I say far, to be honest, okay? Maybe 61,000 or so, to leave some orders not hit there. We'll see what happens. And from there, price continue going up towards this area here of liquidations that I showed you, and also towards these highs here that haven't been hit yet, okay? So if we get something like this, consolidation, 4-hour 50 MA continues going up, and then we see that retrace, that's what I want to open more longs, okay? Because I want to ride this wave up towards the liquidations and towards the highs that haven't been hit yet. So that's what I want to say in the 4 hours time frame. Now in the 1 hour time frame, if you notice here, we've actually tested the 1 hour 50 MA, You can see it there. And price seems a bit overextended. I mean, this helped to reduce that overextension, but still, I imagine that we want to see consolidation here, okay? Maybe we see consolidation and price breaks up to the upside and goes straight away to 68,000. But when you see this consolidation in this area is when we have to pay attention to, for example, wicks to the upside, price not progressing any further. That means that the market maker would be preparing shorts, and that would signal that retrace that I'm talking to, who knows, 61,000, for example, okay? So that's what I want to pay attention. Now, I'm simply waiting to see if we get that consolidation area here, okay? And if that is the case, how is that consolidation going to look like? Is it going to look like wicks to the upside? Or if it's just a simple consolidation like this with no wicks to the upside, that means consolidation before continuation, right? So I'll be updating about this in the next few days, but for now, I'm just waiting. Also, what else? We have this is a long week. Let me use the indicator. Week filler strategy. Let's see what it says. Yes, it marks me that week. I mean, the whole point of the indicator is that it marks the weeks as my eyes do, okay? So this indicator is trained to see the weeks the same as I do with my own eyes. So you can see that it marked a week here. You can see it fading away those levels because they've been filled. But if I zoom in, you can see how that was marked. And now it's marking this week to the downside, and maybe we're creating a new one here. All right, so having this week to the downside, it means that the price could drop again towards this area, okay? So again, who knows, consolidation here, wicks to the upside, but price not progressing any further, and that would signal that we're gonna see a retrace. And for that also you have the confluence of this week. Unless if price does something like this and consolidates like this, that would be different because it would have filled this week and the consolidation wouldn't be really at the highs like here, okay? It would be lower, and that could mean other things. But for now, all I'm gonna do, guys, is wait to see what happens and go back to the daily time frame. Something that I mentioned in my last video was it's risky to open a swing long here, but we can take advantage of this move as a day trader. That's why I opened a position at the 50% of this week. I also had a position at the 100% that didn't get filled, but I traded this move here. I closed my trade at the range lows as a day trader. Now, if we actually get this drop to the range lows, I'll open a swing long as a swing trader, okay? And that will be towards the range high. So that is what I'm waiting for in terms of swing trader, okay? So that's pretty much everything that I want to say, guys. I hope that the video comes handy and it's helpful. And if so, let me know and I'll be happy to update more videos. So thank you so much for watching, guys. Hopefully this plays out and I'll see you soon.